Good afternoon, everyone. This is Henry, and in tonight's review, we're going to start off with the S&P and probably leave the conversation focused here. I thought it might be an interesting spot to see how involved the YouTube community might be for these videos, and running the same question by you guys that I did in our chat room. So on the end of the day today, I think it's just an interesting time to try to gauge sentiment. So here towards the end of the day, just running the poll asking, how many of you think the S&P will make new lows before the end of the year? And you can see the results here were majority in favor of making that new low. So it's just a curious statistic. And I think that, after seeing this, you may have a lot of traders that are leaning in that direction. What I'm going to be looking at, anytime you see a break like this, the first thing that I'll start considering is the 50 and 618 retracement of the advance. So one, just trying to say, we'll see what type of comments we get here for this video. That'll be a fun one. But saying, whichever side of it you're thinking about, the way I believe you first start assessing it is to say that if this advance is more meaningful and bulls are actually going to be able to hold on to this and take things higher in the months ahead, well, then the 618 retracement is usually the most important level. So that's to say that you could come down into that, and when you close like this, like you did on Friday, there's a pretty good chance that you are going to gap lower on Monday. The severity of that gap and also the sentiment that occurs during it will tell us if there's actually an actionable trade to take. But I want you to be mindful of these areas of support along the way. 396 is your 50% retracement. 388 is down into the 618. And while levels can be helpful in determining spots to step in and buy, the thing that I think is actually going to be more important in the current situation is to follow the put call reading. If you wake up and the markets are down hard on Monday, look to this put call reading. If everyone is in on it, and that is to say that the put call reading is ripping up into the +1, that means that you've got more participants buying puts than you do calls, and that's usually how the market will work to find a bottom, right? You have this big, scary open, everyone comes in and gets shorted, and then that helps put in the low. Part of why today had such an easy job of selling off is that reading never became extended. So I think it's almost guaranteed that you see it at a higher value on Monday. How extreme that is and where that pairs up with levels in S&P will hopefully give us a place to act off of it. But I do think that'll be an interesting poll to reflect on later in the year. And I hope it gets some interesting commentary going in the chats. So I appreciate you guys. Thanks for checking out the free video. Have a great weekend, and I'll see you in next week's update. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful. And if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.